Good morning. My name is Pat Ownera. I'm the chairman and CEO of Vinium Capital Partners. I'm joined here with some of my colleagues, as well as Jasmine from Coinbase, Pat from Oasis Pro Markets, and Anthony from Ownera. And we're going to talk about the tokenization of how tokenization leads to broader distribution and globalization of private market assets. And what is the reality of that versus the promise of it? Where do we stand today, and where is it going? And what's the infrastructure being built today to deliver that? And so we're gonna spend a little bit of time. We're gonna move into this. I think we have Simon, who's going to join us in progress from Archax over in the UK as well. But why don't we start with a few introductions? So first off, it's great having all of you guys on. Thanks so much for being with us. And what I'll do is, Pat, I'm going to start with you as an old hand. You've done this a couple times with me. Give us 2 minutes on yourself and Oasis Pro Markets.
Great. Thank you, Pat. Pleasure to be here with this august group. I'm looking forward to the discussion today. Pat Lebecki, I'm an investment banker by background. I had the opportunity to run groups at Credit Suisse and Bear Stearns, now JP Morgan, and a whole host of other groups. Got into this area about 4 years ago of crypto and blockchain. Separate the two. We're all about blockchain, not crypto. So as long as you separate that, that's a lot of what tokenization is about, world assets. Oasis Pro is a fintech company, global. We provide a full suite of services from tokenization for certain clients. We also work with great groups like Tokeny and DigiShares and others. We also are a SEC registered transfer agent in the US. Outside the US, we provide cap table management technology. We have an API management dashboard for infrastructure tie-ins with large institutions, and that's really our focus. We have a marketplace for raising capital. Here in the US, we have the licenses for that. And we also have an ATS, an alternative trading system in the US, to trade tokenized securities on the blockchain. So that, in a nutshell, is what we're about at Oasis Pro.
And Pat, for full disclosure for everybody, right? Pat and Oasis Pro Markets, corporately, they own a piece of Vinium, and Vinium also was an investor in Oasis Pro Markets, and we have some joint ventures together. And
well, you still are an investor in Oasis Pro Markets.
Yeah, that's right. We still are. Yeah, no. I'm sorry, I didn't mean to use that. And so we wanted to put that on the record. We have some joint projects together. Pat's doing great work, and thanks, Pat, so much for that introduction. Jasmine, I'm going to go with you next. Give us a little bit about yourself, and then also what you're doing at Coinbase Asset Management.
Yeah, hi. So COO at Coinbase Asset Management. We're newly acquired, so we've been Coinbase Asset Management for 3 months now, finally getting used to the name. We were previously One River Digital, so we spun out of a heritage traditional hedge fund. We all have macro backgrounds and have been in the sort of traditional markets for 25 years plus. See a lot of the inefficiencies in the market, see a lot of the efficiencies DLT can create, and are looking at bridge areas in those areas. Mainly focused on the asset management side, so that does cover more than just investing, but it really is bringing and garnering incredible investments to light through these mechanisms. So either just Bitcoin, Ethereum itself, actively managed versions of crypto, and layering in crypto digital securities, which are traditionally tokenized funds, and then digital bonds, etc. So looking at taking new ingredients and layering them into more incredible actively managed solutions. So we're focused on mainly bringing funds to life, as well as bringing two infrastructure platforms. So one is really printing digitally native securities. So rather than having a digital bond over here and then putting it onto a token, actually having the blockchain, rail all of this sort of information there. And then the second is putting together a huge marketplace. So together with Oasis, the idea is rather than going to the baker and the butcher to get all of your sort of real estate from one exchange and something from another, having one UX to aggregate the entirety of all your crypto native, all of your various different investments through the digital space, so that you've got a portfolio effect.
Jasmine, that's great. And you guys are doing, I'm going to do just a quick follow-up question. You're doing a lot of work overseas right now, right? We read about you in multiple jurisdictions, and I should say Coinbase, which is separate, and Coinbase Asset Management, right? But you guys are looking at a ton of geographies, and we want to come to that in a little bit, about what are you looking at and what jurisdictions are you going to operate in, and where is CBAM gonna be trading these, U.S. versus overseas jurisdictions, and we'll go from there. Does that sound good?
Sounds great.
Anthony, great to have you, buddy. We appreciate you joining us. Give us two minutes about yourself and Ownera.
Sure. Yeah, no, and absolute pleasure to be here. Thanks for the invite, Pat. Fantastic. Right. So yeah, Anthony. So I'm the head of business development for Ownera. Very briefly, my background is much like Pat and Jasmine. I was 25 years in public capital markets and saw the whole electronic transformation of those markets over that time. Ultimately, I left the institutional world to join Ownera, to join the fintech, because I very much bought into the vision. And actually, it's something Larry Fink at BlackRock said, I hope I quote him correctly, a few months back. But basically, tokenization is the future of markets. And when he said that, and when I believe that, it's because we have the opportunity, especially starting with the illiquid world of private markets, to really digitize that, tokenize it, and bring it online in a way maybe we would have done with the public markets if we had this technology 30 years ago, right? And what Ownera is doing, it's something very specific, because we could see all these amazing venues, like Oasis Pro and things going on Coinbase, etc., starting to tokenize assets. You've got every institution's got a project to tokenize real world assets and make that available to investors. But we understood that ultimately, as well as doing the issuance of those assets, you want to open up distribution at a global level, which then unlocks liquidity, secondary markets, etc. So Ownera, starting 3 years ago, we worked with the industries, bring the industry together to develop a peer-to-peer open source protocol that enables that to happen. This unlocks distribution rails that connects institutions that have assets, institutions that have pools of investors, or in the case of exchanges, both. And we think this is key to the core topic we're discussing today, is ultimately to drive that distribution liquidity in the private markets. You really need to open up distribution at a global level, right? Individual venues, sites will get a level of liquidity, but when you're dealing with the illiquid world of the global private markets, you really need a way to connect institutions globally to really unlock that.
And I think it's really interesting when you think about the Jasmine, Pat, Anthony, the three of you, as three distinct mechanisms of front office. You know what I mean? If you think about it, right? Pat's a marketplace where people gather to buy and sell, and they can bring that, and they're also serving as core infrastructure. Anthony, you're connecting multiple people who want to sell within their own network, right? So not in the open marketplace, but what they want to do is connect up and borrow and create that network effect to sell it into it. But Jasmine, you're directly connecting the end customer, who you are bringing funds in and buying it and acting as a fiduciary, right? Where you're coming in and setting up these funds and setting up a front office. But these are, I know, similar, and there's certainly some overlap, but these are three very similar roles that are front facing, right? On how do we get distribution? How do we grow that? And I think that's the whole point of today's session, is how do we grow that globally, and what does that look like globally, and how do we do that both in a collaborative manner, and where is there some competition? And I'm going to go here, and I'm going to have Sanjay go next. Sanjay, give us the 1 minute background on what you're doing at Vinium. And Sanjay is the president of International, but talk to us a little bit about what you're seeing and where we're working, and this Vinium role globally. You're on mute, brother.
Classic old error. Sorry about that. Thank you, Patrick, very much, and pleasure to see you, Pat, Jasmine, and Anthony, and thank you for all your support. And what I'm seeing internationally is there is an upkeep that the governments and the regulators are realizing that for their economy to grow, right? So there are economies that have grown, there are economies that are trying to go from 3 trillion to 10 trillion. There are economies that are trying to form a better protection for the investors. So when you go to Middle East, when you go to India, when you go to Southeast Asia, Singapore, and when you go to Australia, on these 4 continents, their regulators are getting very, very aggressive on unlisted asset, i.e., known also as private assets. So they call it unlisted assets for better transparency, more third-party valuation, but also giving an opportunity for the members, especially in Australia for the supers, for them to have a liquidity on demand as and when they want it. This is what the APRA comments and regulations are coming out on. In India, they have got regulation out, SEBI's got regulation out, demanding better elements of transparency on unlisted asset and frequent valuation from third-party independent valuation to protect the investor. And now they have created a regulatory authority in Gift City, IFSC, which has already started a common sandbox with 6 countries on tokenizing real estate assets. So these countries are realizing for their economy to grow, they need to tap into the unlisted assets, create more liquidity out of it, create more churn around it. Now, the adoption is difficult. There is a lot of people doing it. I'll give you an example of one of our clients who basically said, I would have made 2 calls and I would have got $20 million to fund my building and I would have no problem. But the person decided that he's going to go, and because they're tokenizing part of their real estate asset, they're going to go out and they need 500 investors for the 20 million. They don't want 3 investors. So people were ready to give them a check for $10, $20 million, but they don't want that. They want 500 so that it's trading around it. So I think the financial inclusivity is a very important thing, and the democratization of alpha. So we are seeing significant movement in international arenas. We are seeing significant tailwinds from the regulators and the government encouraging it. And we're also seeing infrastructure asset, that is cash flow monetization of road assets and everything else. Those tokenization happening. In the last 4 days, I've heard of 5 such projects to be launched in the next 2 to 3 weeks. And this is at the CEO level and the board level who are saying it. This is not someone at the junior level testing the water. They have been told to do this. So I think the momentum is huge. I think in America is a little bit slower, I would say that. But on the international front, there's a huge adoption. And not to forget South Korea. South Korea is actually also pushing greater transparency and then the element of tokenization around it.
Yeah, it really is interesting to see what venues you were starting to see a lot of traction. And there's some venues where there's been an enormous amount of talk, but not a lot of action for years. And what we're starting to see is, Todd, I'm going to use your word from yesterday, right, as we were having some of these conversations, right? Finality is coming to some of these trades that have been in the development for 2 years plus, where we're starting to see finality come in, where we're seeing these come alive. Todd, give us 1 minute on your role inside Vinium and what you do.
Yeah, thanks for having me. Nice to see everyone on the call. Yeah, I'm much like Pat and Anthony, a reformed banker who jumped into the fintech pool, and really the reason I did so is I'm really eager to see the future of markets that Anthony quoted, that Larry Fink said, because I'm a strong believer in that, and I just wanted to help be one of the architects on the way into these future of markets, and it's a lot of fun, and it's not easy. And I think what we're talking about is really stitching together this sandwich, which is origination, distribution, and everything in between. And part of my role at Vinium is I look after capital markets and corporate development, and then also have a role alongside Pat working on stitching together our ecosystem. And that's probably the most fun part of my job, is really just working with everyone, trying to figure out how do we stitch this together such that it is what Jasmine mentioned, that unique user experience that just works. So
I'm sorry, buddy. I didn't mean to cut you off. Yeah, and so I think that this really is interesting. And I'm gonna tee off something you just said, Todd, which is you said I'm a banker, right? And for a lot of the people who are watching on
Reformed banker.
Reformed banker who are watching, they don't understand that within that designation, a lot of people would take umbrage at other people who are saying that, right? Because they just think, oh, it's all one thing. But the reality is the investment bankers, right, and the corporate banking guys viewed the traders as the knuckle draggers, right? You know what I mean? And they didn't want to have anything to do with those guys versus the guys who did ops and admin and made things happen. But what we're seeing is, I think that we're going to see this next shift, right? And I use very much in my own mind an example of when they deregulated the commissions on exchanges and on brokerage, and you saw volumes increase by hundreds and hundreds of percentage points of the number of trades. And you had firms that were not able to settle and clear their trades on the old infrastructure. And this is one of the ways that both Merrill and Citi grew, is because they had the back office operations that allowed them to exist in a new environment and a new reality. And what happened is literally you would have the regulators come in and said, you have not settled your trades on T+3 for 7 days in a row. You have 2 days to fix it. If not, we're going to arrange somebody to buy you, right? And what we're seeing is people laying the tracks. What does it mean for these alternative investment funds in India, for alternatives, for interval funds, for all of these private REITs, where these are going to be tokenized, traded, listed? People are going to be able to buy and sell them on their phones. People are going to be able to store value directly in real estate assets and other types of alternatives. And is that infrastructure layer that's being laid right now, how much of an obstacle is that going to be? And how much is that going to change the landscape? And my view is the big difference is there's an efficiency play of finality of settlement, and that's true, right? There's an efficiency play that we're going to be able to clear out an enormous amount of the administrative costs in servicing these alternative funds. But the real global changer is distribution, digital distribution, where people have access to do this, and the global mass affluent can gain access to this. How much is that going to change the game? And I'm going to go, Jasmine, I'm going to start with you. Talk to us about when you think about Coinbase and what you're doing and what you're investing in and where you're going. Is that the game changer that you think is going to reshape the landscape? And is my analogy, does that make sense to you, or do you have another one that you think frames what this opportunity over the next 5 years is going to be?
Yeah, absolutely. So delineating the promise from the actuality and the variants of different, use cases that tokenization can bring to market. So you absolutely described the idea of the REITs. I think real estate is definitely one of those areas that lends very, very well to this area. It is a specific unit, especially if you've got big commercial buildings. You can't find somebody who's going to, buy an entire building for 600 million. And if you do, you end up going to the big names. The names that start with black, to find heavy funding for these big instrumental buildings. So the democratization is clearly just not there right now. The ability to sort of do a quote unquote crowdfunding is not completely new in this space. Everyone's doing crowdfunding in many different micro areas. So to be able to take that to the next step and do it in a way that makes sense, and using DLT so that it's a trusted ownership cap table sort of process, makes even more sense. If you think about the international scene, so trying to work through the legalities of, do you see this the same way I see this? What law are we even going to stamp this on? All of that creates a lot more agony for anybody trying to do any business at all. So the idea of having it tokenized does bring sort of a new light to how are we homogenizing product so that it can go on universal rails that are universal to the entire sort of globe. And that isn't an easy sort of tick in many different ways, but that is sort of the promise and hope. So the reality, though, here in the US, real estate is definitely one of those areas that lends well, because we have had Delaware rules in place where you can spin up a company and then issue shareholding in tokenized form. And we've had that since 2017. So it's not a new sort of concept. What is sort of interesting is that we're using securities laws that have been there for decades. And that's great because there's clarity. But there are sort of nuances that may not lend itself really well to sort of the next layer of amplifying the space, i.e., partnership counts with 100, the inability for LPs to sort of convey with each other or exchange with each other without the accredited investor checks. So is a accredited investor going to go and check and find somebody else? No, they will need a platform. They will need infrastructure. They'll need somebody to say, here's another person you can sell that product to. Everyone's still getting their head around the amount of disclosure and information asymmetry, which has been natural in private markets for a long time and somewhat not an issue because there isn't a mechanism to really trade. So somebody getting information a day before somebody else isn't putting them in sort of a favorable position to be able to trade. A lot of that will need to sort of be reworked. But, I think it's very solvable. Digital Web2 platforms can share information instantly. So we're all just building out, that sort of set of rails. What I see a lot more promise in, and this is probably lending to my background, is coming from hedge funds and even the macro environment we're in right now. We're trained to go, I need to invest. I'm thinking of the stock market. And not everything lends itself well to the stock market. Owning commodities directly, owning ESG kind of energy, owning real estate, none of this lends very well to putting it into an ETF structure. So tokenization will be that next layer of uplift that we've seen in asset management, beyond what ETFs can and ever will be able to do. What we do see as a struggle, though, is we have only a closed-end form mechanism here in the US where I can't be the issuer of tokens and have those token holders come back to me to get redemption. So in a mutual fund mechanism doesn't exist here for tokenization yet, only the closed-end fund. So we're really looking to sort of see how that works here in the US, and then probably lends a great segue to your other questions, which is what are we hoping to get in going internationally? We are hoping to get that sort of mutual fund rails and the regulatory clarity that exists in a way that makes people feel there is enough regulation so that you're protected, but not too much so that it removes all the frictions that we're achieving in tokenization.
Thank you. Anthony, when you think about what you guys are doing at Ownera, where you're connecting a number of these things together, give me 2 minutes on what you're seeing as the vehicles and the pilots. What are those projects that are gathering momentum that your clients are seeking to use at either end? As Jasmine was relaying some of those issues that we've been working through for quite some time.
Yeah, indeed. So, yeah, I mean, we have the privilege of sitting in the middle of this, taking this very neutral position of looking to open up distribution on a discretionary basis between institutional parties. And I think, everybody's aware that we've had various tokenization venues like Oasis Pro, distribution points like Coinbase, etc., come online the last few years and starting to get traction around this tokenization of assets. But what's also going on, which you see about in the press, but is less visible, is every large institution, buy, sell side, etc., are all got projects tokenizing assets. They understand the potential of tokenizing things like real estate, equity and debt in private companies, so on and so forth. But they've been in the lab the last few years. What's happening at the moment is we're getting to this crescendo where those things are coming out of the lab, and we're involved in quite a number of projects now, which are connecting institutions that have high quality institutional grade assets and enabling them to establish peer-to-peer connections with points of distribution, whether that's wealth managers with large pools of accredited investors, whether that's exchanges, etc. And this technology, these rails enable that to start to be unlocked at a global level, to start to codify and address issues such as cross-jurisdiction, distribution of assets, etc. The other thing I would say, I'm quite conventional in some ways. I'm a strong advocate of there's a lot we can do right now under existing securities laws, right? We have the private markets exist today. They're offline. It's highly manual. We're digitizing that. But in that context, there's a lot we can do. And with projects that we see going live this year that really function off existing securities laws, the technology codifies and enforces those things. And so ultimately, you'll see in the coming months quite a number of projects come to fruition that are really starting to unlock this distribution between issuers, between distributors, exchanges, etc. And that's the key, I think, is opening that up at a global level. So ultimately, you know, if you've got a piece of real estate you've tokenized, somebody's bought a chunk of it out of California and they want to sell it, the buyer's not necessarily going to be on the same platform, right? They could be in the Middle East, they could be in Singapore, they could be in Europe, etc. And ultimately, we're looking to solve that problem. How do you unlock this so that tens of thousands of assets can potentially be accessed by millions of investors?
Yeah, and you know, the size of the trusts for CMBS, RMBS are so big, and it takes so much time to construct it and put it together, because the buyers who want to buy big chunks, they have to buy what's in that trust, and the atomization and the ability to say, I want to own this thing, this thing, this thing, build their own portfolio, or buy into a broader variety of investment funds, etc., is pretty meaningful. And Todd, I want to come to you, right? Talk to us for 1 minute about where you're seeing the opportunities that are right now, that are live, and just talk for a minute about, from an Vinium standpoint, there's efficiency scale where people are buying efficiency, but also they see this digital call option, right? Where they're all of a sudden they're saying, I have the ability to get everything ready to go once this distribution becomes live. And I'm going to tee that up for us to go to Pat, right? Where we say, talk to us about the nature and the scale of, as Anthony said, these experiments that we've been doing, right? In Vinium, we tokenized common equity 9 days after that law passed in Delaware, right? In 2017, that was our first tokenization. But we've done a lot of these little experiments. Some have been commercial, but the question is, how is this going to become mass commercial? You know what I mean? How is it going to go mass commercial at scale, and where is that going to happen?
Yeah, no, I think it's a good point, and with Anthony, Pat, and Jasmine, their focus is heavily on starting with distribution and leaning back in, and because I know everyone provides an infrastructure layer. We spent a lot of time on the origination and bringing kind of enterprises to the blockchain, getting their data ready, and then being able to push it into that digital call option that many enterprises look at and say, I need to have a Web3 solution. I need to be digital ready. If I'm digital ready, then I can flick the switch, and then I can call Pat or Anthony and say, light it up, let's go, or call a fiduciary and say, oh, I can sell into you. So we spend a lot of time on the front end of whether it be origination to infrastructure, and then have the handoff to distribution. So I think there is a massive eye-opening from the enterprise community, the asset managers of the world, that they all have people focused on digital, whether it's ahead of digital and whether they're just exploring, or whether they're on that journey and want to do trades. And we've heard, I don't know, Pat, you and I, we've been in a few meetings the last couple of days, and there's a number of people, they talk about wanting to do trades and stop tinkering around and doing POCs. And so that's where I think we're shifting is people are shifting towards just execution, test it out, and let's make sure it works. And then ultimately, when we get to that fine tuning, that's when we start winning, because that's when institutions come into the game, when it's just fine tuning. Everything works. We filled the large gaps. We've done the punch list on the infrastructure, and now we're just fine tuning. That's when you'll see a lot more institutions kind of enter the game.
Yeah, Pat, I want to tee that up to you directly, right? MakerDAO had a relationship, we talked about this on last week's webinar, with Huntington Valley Bank, right? And they had a credit facility for $100 million, that Huntington had drawn down 40 million. They were accessing Web3 liquidity from MakerDAO, which, by the way, many of us who've interfaced with MakerDAO for years, we know that that was no easy feat, right? To actually get the community to agree to that, to do this. Almost immediately thereafter, Citizens bought Huntington Valley Bank. That acquisition did not happen because Citizens said, I need 11 more branches in Northwest Appalachia, right? What they said is, I want the guy who actually turned Web3 liquidity into reality as a part of my team. And what we're seeing is the people who are actually turning tinkering to commercial, immediately someone big is gobbling them up. And we're seeing that in companies that we sit on the boards of. We're seeing this in companies we've made investments in. We're seeing this in our end users. Pat, you came, Oasis Pro came out of MakerDAO, right? They're a big shareholder of yours. Talk about that move from MakerDAO to regulated, and how are we bringing that Web3, that vision of Web3 becoming a reality? Because this is almost full circle.
Yeah, absolutely. The HVB deal was an interesting deal. Made a lot of news. I agree with you with Citizens, et cetera. There's a definite opportunity there. So there's this DeFi component, right? And that's what Maker represents now. Interest rates have moved. So that type of deal today probably, won't happen in the DeFi space because you can get 4 or 5% in money markets and treasuries, right? And I believe that loan was at 4% out of the DeFi ecosystem. But going forward, the tracks have been laid to incorporate decentralized finance into real world assets. MakerDAO is a great example. MakerDAO is a granddaddy of decentralized finance. And the opportunity there at the end of the day is eventually there will be a need for valuation marks in Vinium, right? Potentially trading, fractionalization. Jasmine touched upon that earlier, and the opportunity to actually trade this. I think that to a couple of points. The point of smaller companies being gobbled up, I think it's a wider trend. What we saw with the large institutional players, where everybody was trying to build it themselves over the last 3 years, quietly, internally, and the market hasn't come as quickly as some of us expected, right? And some of these groups, large institutions, banks, custodians, asset managers, et cetera, made the determination. I think everything really accelerated with the FTX debacle and what happened in crypto, because for us, everything grew exponentially in terms of inbound calls then was, hey, we're not going to make the investment ourselves. There are these companies out there like Vinium, and One River was acquired in recently, like Oasis Pro and others, that have been spending the time in building this infrastructure. And rather than building it yourselves, they've been building an ecosystem together as well, and to tap into that. So I think that that's the real exciting aspect for us right now, is there's this movement about build it ourselves to let's work with this ecosystem that started 5 to 7 years ago. So some of the early players are no longer with us, but those of us who've survived and have continued, we're in a very strong position. We've also moved with ERC 3643 on the security token side. Tokeny established it. Now there's a foundation. We're a founding member, and Vinium's a founding member, and some others as well, like State Street. That's exciting to have actual standards out for real world assets. So the movement is heading in the right direction. So
Hey,
we're
Pat, I want to interrupt real quick and come right back to you on this, because you made a comment. One of the things we're seeing this too, right? So a bunch of people said we're going to build it ourselves. They spent some money on it, and they said, "Wow, this is harder than I thought," because the person they put in charge was 27 or 30, technically very competent, right? But did not have the gray hair or the market domain expertise to understand what were the implicit dependencies that we had to solve for. So they didn't have a Pat LaVecchia. Do you know what I mean? Somebody who'd been in that market, who's been trading for a long time, who was leading the product roadmap and the technology. And one of the things that we're seeing is inside some of these big shops, their own version of Pat LaVecchia didn't believe it. Or even if he did believe it, it wasn't in his best interest to encourage it. You know what I mean? And so what happens is that infighting was killing, and they weren't getting that knowledge. They weren't getting that buy-in that was to support that internal project. And so they just go, we can't develop. We don't have the tools that we need, and the domain knowledge is not being shared internally. We have to go external to find this, right? We're seeing this a lot. And so a lot of the big entities that said we're going to do these projects, they're coming out, they're partnering, they're signing new partnerships, they're throwing out term sheets to buy. It's very interesting. And so the lack of, for lack of a better term, a Pat LaVecchia, do you know what I mean? Who had 25 years inside some of these internal teams, I think is one of the reasons that they couldn't win. Do you agree with that?
I do. It's interesting you say it along those lines. Yeah, it was quite frustrating. They took the tech approach, we know better type of approach, and they had a huge, huge organization behind them. But I think you're absolutely right. I think Larry Fink coming out with tokenization is the future. It had a big impact with asset managers. I mean, part of the issue is this. A lot of folks looked at this market. A lot of folks in this market actually come from FX backgrounds in terms of this ecosystem, as well as electronic trading backgrounds. Now, if you look at electronic trading and Instinet and central order books, they actually had an established infrastructure that they just built on.
Yeah.
And then really what they created was a market, right? That was their focus. Unlike that, blockchain, new tech, there's a bridge from legacy to the new tech. But we're building the infrastructure and trying to build the market at the same time. And these large institutions came to that realization. And that's why I believe you're seeing this tremendous interest. There's going to be more POCs. There's a rumor there's $1 billion tokenization occurring sometime in late summer, maybe early fall, for a fund tied to an asset manager. The issue is tokenization, what the right standards are, open standard versus closed, et cetera, and what blockchains to use. But that's happening. There's apparently an announcement next week where 3 large infrastructure players are going to be announcing a interoperability over DeFi. It's a POC, but it's going to be announced. So it's happening. This is happening. And I agree with Todd's comments regarding let's start getting away from POCs, make sure it works. And we've been saying this a lot, which is we are inside a number of these institutions, as is everyone on this panel. But what we're doing is we're becoming part of that vertical blockchain business unit. And when they turn it on, when they're comfortable from crawling and ready to walk, our tech and our approach, our ecosystems are going to be a part of it. And I think 2024 is going to see a tremendous growth in that area, especially with REITs, asset managers.
Yeah, and when we talk about this, I think one of the things that we need to talk about is fundamentally DeFi, decentralization, blockchain is a networked reality. And if it's not a networked reality, it's not DeFi and it's not decentralization and it's not distributed ledger because it's centralized ledger, right? And we understand that there's steps to decentralized ledger technologies being fully utilized. I use the example all the time. Bear Stearns, we had a VPN that we were very proud of, right? That everything worked on. And then, we were one of the first people out there that had this. And then we realized, hey, the internet works just fine. We don't need our own glass, right? Run everywhere, right? So the whole point is permission to chains as training wheels to public chains. We understand that there's a lot of regulatory fights over that, and the OCC is big on the permission chains, and we understand why the banks have to do that. But the reality is that's going to sort itself out. but there's a fundamental question of centralization versus decentralization. And there are some people who say, I want to do the whole thing by myself, or I'm going to exist in a networked reality where I'm using multiple microservices from multiple competitors, and we as a swarm are going to move faster than an individual entity. And Sanjay, I'd like for you to talk about this. The value of the individual big player versus the ecosystem of fast movers and experimentation. Which one is going to win? How is this going to work? And is the macro trends, talk about the macro trends of co-opetition, what we're seeing in creating an ecosystem that must work, the internet, right? You got it, the internet with only one node is not the internet. It's a database, right? Same thing with a tokenization platform that's not connected to anybody else. That's a database, right? How do we turn this ecosystem into a global economy?
Okay, so Pat, let me set the basis for that, and I'll go back to Pat Lovakio's discussion, right? In the public markets, technology followed adoption. Adoption was there. Technology made it easier for people to get into it and made it more efficient, right? The ATSs and everything else, right? And reduce the fee pressure and everything else. What we are struggling on unlisted asset, private asset is technology is there. We have transparency now. We have now many digital asset exchange regulated globally, about 15 to 20 right now globally. Last year, this time, there were 5 or 7 of them. So that has happened. But where is the adoption going to come from? That's a macro trend. Where is the adoption? Who are going to be the buyers of these tokens? And the general consensus coming out, at least from Asia, at least from Middle East, and at least from Australia, and the supers are raising, it's a mass affluent and affluent. It's not the institutional investors who are going to be the first adopters of buying the tokens, right? So I'll give you one, and on a global macro thing, I'll take examples. India has 300 million individuals who are allowed to invest $250,000 every year on assets globally. What do? They go and buy whole life insurance policies because they do not know where to park the money. So now government is coming up with aspect relating to gift city and all those things where people will be allowed to buy into tokens, where they can get transparency, where they can be traded off. So the financial inclusivity and the making the alpha available to affluent and mass affluent and getting them to come in and out is very important. So where is the adoption going to happen? I think we can build it and we think they will come. I'm not sure. If we don't point to the right direction, they're not going to come. And if we don't point at the right region, they will not come. Right? That's my perspective on it. Sorry.
No, that's all right. I'm reminded of a quick story. On my last company, I had a board member who was a very famous public official, and he was given a big award, and they asked him to speak about something. And I was at the awards dinner, and he said, I know you've asked me to speak about this, but I don't want to talk about this, so I'm going to tell you about this. And he was at a stage in his life where when he got an award, he could speak about anything he wanted. Do you know what I mean? I feel like Sanjay's a little bit like that on our webinars. I ask him one question and he completely answers something completely different. Sanjay, you've reached that stage.
Hey, Pat, can I add a point to Sanjay's kind of answer? Because I don't think mass affluent being the leaders versus institutional, I don't think those are mutually exclusive circles there, because I think what you might see is the big institutionals seeking liquidity from mass affluent, which blockchain rails can help, and they would be the 800-pound gorilla buyer. And so I think those two are much more linked than we give them credit for.
That's right.
We have a lot of PE funds and big asset managers that want to access this mass affluent, and in venues, whether they be advised or non-advised, are going to be the fishing kind of pools for these.
Amen. And Pat made a comment, and I don't mean to keep coming back to this, but about crypto versus tokenized securities. And if we think about crypto as commodities, right, versus securities, and where there's some question about which side of the line do they fall on, the point is the commodities, stablecoin has become the killer use case of blockchain today. It is, right? It's got more liquidity. It's moving around. It's unbelievable, the amount of liquidity in it. The amount of money that's going in is epic. And by the way, it's going to be interesting because I believe we're going to see crypto and stablecoin as the very first early adopters. As we get tokenized securities right and rails, they're going to be buyers. They're going to be the connection point. And if you don't think they're the connection point, it's like getting into a race and you got somebody who's been racing for 3 years and somebody says, but I've been building the biggest, best car there is with the best engine. Yeah, but you've never driven around the track. Do you know what I mean? And until your car is up and running and driving around the track and customers can use it on their phone, it's not real, right? And stablecoin is real. It is live. It is 24/7, 365. That is kind of a major piece. So I'm going to use that to directly go into you, Jasmine. Talk about Coinbase Asset Management. You are in many ways a first mover from an institutional digital asset management. What is going to be the differentiation for you as a first mover that is a differentiator from every other asset manager in the world? And where are you going to bring that differentiation? And how does global play into that aspiration?
That's great. So trying to tie a whole bunch of this. So your points on stablecoin, right? You think about the distrust in banks right now and the mechanism that it really doesn't work. If you are designing a private fund and you have a asset pool like most of the banks have, you would never design same day liquidity. It just wouldn't happen. And so the idea of acknowledging that even at the most highest of order and going, okay, well, where do I park my cash now? Stablecoin is that. And when we get the regulation, that'll help, but there is a level of trust or at least a diversification property there. So if I've got all my money in stablecoin and I want to do an investment, what am I going to do? Go off rails, T+2, and then go and make the investment? No, I want it same time. I want it real. So Coinbase is acknowledging that. Coinbase Asset Management more so. We're bringing to life things that are palatable for the street in terms of what are easy things to think about. So tokenization definitely brings new markets. So you could argue that it brings new liquidity. What it definitely does is it removes the friction of that. But if you're going through a 400-page document and then going, I don't want to do those extra 2 pages with a lawyer, you're probably not relatively reducing all this friction. So we're thinking about things more on the liquid side. So bringing money market funds, aspects that are, I already know what that is by just looking at the title. I don't have to read a big document and then just buy it. So coming up with sort of like macro pillars and bringing that to life so that if I'm trading my Bitcoin or holding it and I want to sort of diversify, I can instant transition out to a whole bunch of macro pillars, fixed income, FX, global equities, commodities, oil. We're also looking at bringing a lot of things that just don't fit the spectrum of access right now. And that's the main thing is everyone's really focused on ESG for all of the right reasons, but people aren't really bringing the products to market. And when we see something come and land as an ETF, which is only happening in America, America is very much the land of ETFs. We don't see anywhere close to that sort of spectrum of investments globally. But if I want to invest in something, I literally, as an ETF, have 42 middlemen. It takes 10 weeks to come to market, and I have a gargantuan amount of requirements that are maybe just not even fitting to what I'm trying to do, i.e. bring windmills to the street. So if I want to buy a fractionalized windmill, that's phenomenal. If I want to buy a fractionalized version of something iconic like the Shard so that I can be the first in the elevator, fantastic. So if you think about all of the elements of retail being the people who are using their phones for this, we want to deliver what they want and what is easy for them and then work out the spectrum. We're very, very much working on bigger deals as well with you guys on the most sophisticated of things that have more frictions and bringing those on digital rails so that there is the sort of reduction. So we're looking at really the polar ends of the whole spectrum of asset management, the very easy, quick and the very, very, very high friction stuff and working into the middle that way.
I think that bringing to the middle is very interesting, right? In your first comment, it is not going to be a tokenized fund for distressed sub-debt on renewable energies in regulatory questionable, jurisdictions, right? Because people are going to go, it's going to be new tech to something that is a no-brainer, right? Core real estate, multifamily, light industrial, ag, right? Where you say, I buy that core proposition, I'm going to have some diversification in there, and the tech is going to allow me some efficiency to get there fast. So it is going to be that thing where you see the title and you go, yes, right? Yes. So I think that makes total sense. And this retail buying those types of assets and the institutional of what we're working on, literally delivering those so those trades clear on the large institutional assets, suddenly we're going to start to see a market of both ends. And Anthony, this is your whole business. Markets at all ends, right? Those endpoints. Talk to us about, as you're bringing this together and your clients and your users who are implementing this, your whole business is, how do we see each other's books? How do we clear and settle and trade on things that were originally just distributed internally only, but we want to start to see markets made around it and bring mass liquidity? Is that right?
Yeah, that's right. I mean, fundamentally, we see a world where, say you've got a Coinbase has large numbers of investors. They want access to these tokenized assets. Maybe Coinbase is tokenizing some assets, but actually you should be able to give those investors access to those assets wherever they are, whatever blockchain technology they've been tokenized in, whatever part of the world. And that's where we come in. And this peer-to-peer distribution rails that we've created with the industry to interconnect institutions, fundamentally what it's doing is it's orchestrating securities transactions. It's orchestrating in real time between the two legs of that transaction. And if you can do that, because ultimately what's the business requirement here? The business requirement isn't to talk about tech and blockchain, etc. The business requirement is, can you give investors all over the world access to tokenized assets, whatever tech they've been tokenized on, wherever they are? And when they see it and when they click to invest in it, can you orchestrate that transaction in real time so that they become an owner of that piece of the shard, or they get an investment in that debt straight away? And I think this is the key, this peer-to-peer unlocking of distribution, so that, because investors are where they are, right? And we're invariably talking about the wealth, the ultra high net worth and the wealthy of the world in the first instance. Democratization in this context is first of all about getting some of these really high quality assets accessible, not just to pension funds, but to high net worth individuals. And if you can start to do it, they are the clients of wealth managers, they're the clients of Coinbase, they're the clients, and you need to be able to get these tokenized assets to where those investors are. And I think that's the tipping point, when you can start to connect institutions on a peer-to-peer bilateral basis to unlock that.
And when we look at the macro trends, and we have about 7 minutes left, so I want to do a speed round, right? We look at the macro trends. Is it institutional? Is it going to be institutional one-off to the other? But one of the realities is, you look at a 27-year-old, a 25-year-old, the concept that they're going to schedule an appointment at a Chase bank and open a securities account and schedule a 2:00 in the afternoon meeting with somebody in order to sit down and understand their preferences so that they can have, that we can understand the risk tolerances, versus opening a Robinhood or a Coinbase account. Like, that's a no-brainer. Like, which one's gonna take over the long term? That is no question. Nobody questions that. And what we're talking about here is primary distribution, secondary trading, finding an intermediary or a fiduciary who's going to act on your behalf, who's going to help deploy that in a diversified manner, right, into the sectors that you want, but you're going to be able to buy it on those venues. Suddenly we're starting to see this is an ecosystem. It's coming together. How do you have good data that everybody can see that there is data symmetry and there is not somebody front running or trading ahead or has information anybody else doesn't? But as we look at this, I want to go in and say, what is it going to take for the ecosystem to be fully lit up? Meaning the electricity's running through the ecosystem, because we're starting to see electricity come on in one place and another place and another place. When does the network become fully electrified and the network is trading? Pat, I'm going with you first on this, but you only get 1 minute.
That's a tough one. Baby steps is where I think we are right now, and then crawling and running and walking. But when does it happen? I have a slightly different view. I don't view the high net worth as the ultimate turning of the key. I view institutions as doing that. Now, here in the US, RIAs, wealth management firms represent 41 trillion. A lot of that money is in ETFs. Tapping into that, even 1 or 2 trillion for tokenized assets will be huge. So I see that happening. But for me, it's what we're seeing with institutions, that they're moving in this direction. And when they're ready to turn it on, there's not a demand from institutional investors. It's more from the asset management firms. I'll throw out, every so often I throw out a date. I think we're, 3 years away. And I'm happy to bag and be wrong about that. But I think this year will be a monumental year regarding announcements with large institutions.
About individual big trades. Couldn't agree more. Sanjay, what's going to be the leader? 30 seconds. What jurisdiction, what part of the globe is going to be the leader first, and where's the rest going to come?
I think it's going to be Asia, where a lot of liquidity is trapped in private assets and unlisted assets. Asia, Australia, and where the regulators are giving the wins behind it, and Middle East. And I also think that the one single word that will light up the full ecosystem, I didn't finish my earlier question to you, is adoption. There are people waiting. One of the biggest, largest asset managers of real estate in Asia wants to put $10 billion on tokenization, but they're saying, who will buy it? I can go through the process. Who will buy it? Adoption, adoption, adoption. And that's where you have to go to the place where the pool of adoption is available today that builds towards institutions coming in.
And that is reps. That is reps. That's not all at once. It's iteration.
Yeah, iteration. But start the process.
Todd, give me your final 30 seconds. You're on mute. You lost 10 of your seconds.
Sorry. I think we need to go cradle to grave on some of this stuff end to end. I think that happens with trophy assets. And then also, I think we need a little more regulatory tailwinds. We've heard of some of these regulatory tailwinds coming from South Korea, Australia, India. In other places like the US, there's headwinds. So we need a little help from regulatory. And then we also just need to see 1, 2, 3 different assets go end to end.
Anthony?
I would just say that putting timelines on this is kind of irrelevant because it started and it's not a binary thing. It's incremental. There are changes happening every day right now, which people are not aware of. And what will happen is you'll wake up in that 2 or 3 years time and go, oh my God, this is moving, right? We're starting to see investors getting access to real estate, buying, selling, maybe even borrowing against it to the DeFi point. It's already starting to happen, but it's like anything with innovation. It goes incrementally and you wake up one morning and go, wow, how did we get here? So I think that's what's happening right now.
Jasmine, you have our final word in the final minute.
Okay, excellent. So I think there's 3 things here. One is education, absolutely. And so we've put together a huge platform of certification with Kaya, and that will help really permeate what is the understanding of blockchain, what is a node, all of the sort of attributes that go into the workflows. So I think that will help. People then can touch and feel it. Reevaluating what it means to be a fiduciary. If you're buying something that is illiquid, isn't it better for your actual client to be buying something that is able to be sold in blockchain? So reevaluating what it means. Why are you hesitating? Are you really acting like a fiduciary before for your clients? And then we really have to get through this public and private chain thing. We see it in the cloud. All the banks built their own clouds. They'll get over it. We'll see that happen, and everyone will start to move towards permissioned public chains, which is where the security really is. And then we won't have the interconnectivity issue.
So we're gonna have a public versus private chain webinar in about 3 or 4 weeks. We have Jones Day, the former commissioner of the SEC, Troy Paredes. They're on next week doing one about the regulatory environment, US, UK, EU. We have Jones Day partners in Europe, in the UK, and the US on with Troy talking about what is the regulatory environment. But I want to give kind of one final teaser. Public versus private matters. But as we start to see real value on chain, the proof of stake versus proof of work argument is going to come up again. And that issue is going to come on. And what are the energy efficient proof of work versus proof of stake solutions? And this is going to come up as the dollar amounts on chain get big enough. Does that make sense? And these consensus algorithms are going to matter, and there is going to be a dark horse proof of work chain that is going to grow. Is my prediction. Guys, it's been so great to be with all of you. You guys are the pioneers in this field. Thank you so much for all that you do. And we'll see you all again on one of these webinars.
Thank you.
Thanks,
Thank you
Pat.
all.
Enjoyed it. Bye-bye.
Bye.